Welcome to the deep dive. Today we're tackling something pretty significant, a deep analysis based on those expert reports, the McLarty sources.
Right, specifically that LoopSpeak discussion pack. It's compiled under Devin McLarty, and these are, well, pretty much the definitive post-event analyses from Deep Publishing Group.
Exactly. And our focus is Hurricane Melissa. Not just the storm itself, but why the damage was so catastrophic, digging into the vulnerabilities these specific sources lay bare. It's about more than just wind speed.
And we have to start with the storm's power. I mean, just the raw data. Melissa was a Category 5, record-setting actually, strongest to hit Jamaica in modern history. The sources confirm landfall October 28th, 2025, near New Hope, Westmoreland, and the winds. Sustained winds around 185 miles per hour.
185 mile per hour. That's hard to even picture. And the initial economic fallout painted in these McLarty reports.
It's staggering. The property damage estimates, they're somewhere between 5 and 10 billion US dollars, a huge range, but even the low end is devastating.
And the immediate paralysis.
You saw it right away with the power grid. An island-wide blackout hit 77% of Jamaica. That's what, roughly 240,000 customers? Just boom, offline, crippling everything from minute one.
Okay, let's connect those dots. That initial hit wasn't just buildings. It was the whole country's ability to function, to even start responding. What did the sources say about the human side, the immediate logistical chaos?
Well, the human cost is front and center in the documents. The early regional reports mentioned about 30 fatalities, but honestly, the full toll in Jamaica took weeks to really nail down.
Why so long?
Because the storm didn't just damage things, it literally sealed off communities. Isolation became a massive problem.
Isolation, right. That's the key word.
Absolutely. Imagine the logistics. Major roads blocked, airports closed. So international aid, medical supplies, even local emergency crews, they just couldn't get through during that critical first, say, 72 hours.
So the initial response failure wasn't lack of trying.
No, not according to the McLarty analysis. It was fundamental infrastructure fragility. The system just couldn't cope.
And geographically, the damage spread out, didn't it?
Yeah.
It wasn't just Westmoreland and St. Elizabeth,
Yeah.
although the reports say they were basically flattened in parts.
Oh, absolutely decimated. The sources mentioned 80 to 90% roof loss in some towns there.
80 to 90%.
Yeah. And picture this. You lose your own roof, and then you see the roof ripped off the local hospital. That kind of systemic failure is terrifying.
And even Kingston, the capital, which wasn't in the direct path of the worst winds.
Still suffered hugely from the secondary effects. Flooding, landslides. The Pan American Health Organization, PAHO, their data backs this up. They logged at least 123 communities flooded right across the island. Nationwide impact.
Okay, so this brings us right to the core of that LoopSpeak discussion pack analysis. The argument isn't just big storm, big damage, is that Melissa's power was amplified by existing problems, a systemic catastrophe, they call it.
Precisely. We need to look beyond just the 185-mile-per-hour winds. The analysis breaks down the damage by looking at what they call compound hazards. It's the interaction of three main things.
Which are?
1, catastrophic wind, obviously. 2, storm surge, pushing inland up to maybe 13 feet. And 3, torrential rainfall. We're talking 30 to 40 inches.
40 inches of rain.
Yeah, unbelievable amounts. And the synergy is the killer here. If it was just wind or just rain, it would be bad but different. The storm surge, though, pushing all that seawater inland, it acted like a dam along the coast. It literally blocked the drainage for those 30, 40 inches of rain trying to flow out to sea.
So the water just piled up inland. What should have been, bad local floods turned into something much worse, much longer lasting.
Exactly. Extreme, prolonged inland flooding. That single interaction, surge blocking rainfall drainage, that's identified as a key disaster multiplier.
And the McLarty sources point to two huge existing vulnerabilities that basically guaranteed this multiplier effect would be devastating. What's the first one?
Environmental degradation.
Right, deforestation. We hear about that connection a lot, but these reports are really explicit about it being a primary factor here.
It wasn't just background noise. Years of deforestation left hillsides unstable. So when that massive amount of rain hit, you got catastrophic landslides.
And the landslides weren't just destructive on their own.
No, they became part of the logistical nightmare. They blocked roads, cut off communities that were already hammered by wind and flood damage. Deforestation essentially weaponized the rainfall.
Okay, and the second major factor from these reports, the economic side, they call it the financial gap. This insurance number is, well, something else.
It really is. It defines the financial catastrophe that followed the physical one. Less than 5% of property losses were insured.
Wait, say that again? Less than 5%.
Less than 5%. It's hard to overstate what that means. For every dollar of that $5 to $10 billion in damage, at least 95 cents was an unfunded liability, falling directly on homeowners, businesses, or the government.
That seems incredibly low for a country in the hurricane belt. Do the sources, the LoopSpeak pack, explain why it's so low? Is it cost, availability?
It's a mix, according to the analysis. Affordability is a huge factor, definitely. Availability in some areas, too. But also, maybe a cultural aspect regarding familiarity or trust in risk transfer tools like insurance. For many, the immediate cost just outweighs the perceived benefit day to day.
Okay, so that 5% figure really puts other financial mechanisms into perspective, like the cat bond.
It does. Jamaica has a catastrophe bond, a way to transfer some risk to global financial markets. It was expected to trigger, and likely did, paying out U.S. $150 million.
Could you just briefly explain what a cat bond is for listeners who might not know?
Sure. Think of it like insurance, but structured as a bond. The government issues it to investors. If a specific disaster happens, like a hurricane of a certain measured intensity hitting a defined area, the investors forfeit their principal.
And that money goes straight to the government.
Exactly. Immediately. It provides quick liquidity right when it's most desperately needed for relief efforts.
A critical tool for cash flow, then. But $150 million compared to a minimum $5 billion in damage.
It looks tiny, doesn't it? That payout covers only maybe 1.5% to 3% of the lowest damage estimate. The reports really hammer this point. The cat bond worked as designed, a success in risk transfer, but the scale of the domestic risk absolutely dwarfs it.
Meaning the vast majority of the cost falls back on
the public.
Yeah.
Through higher taxes eventually, more national debt, and just devastating long-term financial hardship for families and communities trying to rebuild on their own.
So given this stark analysis, what's the path forward? The McClarty sources don't just diagnose, they propose a strategy, right? A three-pillar framework for recovery and resilience.
Yes. And it's presented as really the only way to break this cycle. Pillar 1 is fortifying national infrastructure. Think modernization.
Not just replacing what was there.
No, absolutely not. It means rebuilding critical systems, the power grid, hospitals, transport to much higher standards, standards that can withstand future climate shocks, maybe even another Cat 5. It has to be seen as investment, not just repair.
Okay, Pillar 1 is physical infrastructure. Pillar 2 must tackle that financial exposure.
It does, enhancing financial resilience. This is about creating a real long-term strategy to close that massive insurance gap, the less than 5% problem.
How?
Well, the report suggests developing accessible and affordable national catastrophe insurance schemes, maybe with subsidies for the most vulnerable. The goal is to spread the risk so the next hurricane doesn't automatically bankrupt thousands of people and the government.
Makes sense. And the third pillar circles back to the environment.
Exactly. Integrating environmental restoration. This advocates using ecological assets, nature itself, as cost-effective infrastructure.
Meaning?
Large-scale, strategic reforestation, especially on those vulnerable hillsides and watersheds. Healthy forests prevent landslides, they manage water runoff. It's about mitigating future flood and slide risks using nature, which can be cheaper and more effective long-term than just building concrete barriers.
And that environmental piece is directly tied to people's livelihoods too, isn't it? The reports mentioned severe crop losses.
Huge losses, especially in Jamaica's breadbasket parishes.
Yeah.
Destroyed crops, lost topsoil from landslides, flooded fields. It's a direct threat to national food security and the survival of thousands of small farmers. So environmental policy has to be linked with climate-resilient agriculture.
It all comes back to that systemic view, doesn't it?
That's the absolute cornerstone of the whole Devin McClarty analysis. You need a systemic risk framework. You have to understand and plan for the cascading effects. Wind damages infrastructure, surge blocks drainage, rain causes floods and landslides, landslides cut off aid and destroy farms, lack of insurance creates financial ruin.
You can't just look at one hazard in isolation.
No. Melissa proved that when failures across environment, infrastructure, and finance line up, the damage isn't just added together, it multiplies exponentially.
That really is the crucial point for you, the listener, to take away from these sources. Yes, Hurricane Melissa was incredibly powerful. But the real catastrophe highlighted here was how these intersecting risks, geographic, environmental, financial, foreign, amplified the damage far beyond the storm's raw strength. The system's vulnerabilities were the ultimate destructive force.
And that LoopSpeak discussion pack leaves policymakers with a very stark choice, really, a provocative final thought. As they rebuild, are they just going to spend reactively patching things up, returning to that same fragile state, and basically locking in future losses?
Sure.
Or will they make a proactive choice? Use every resource, including that $150 million cat bond payout, as a down payment on genuine long-term investment in modernized infrastructure and nature-based solutions to actually try and break this devastating cycle.
A profound choice indeed, one that shapes not just recovery, but future survival. Thanks for joining us for this deep dive into the McLarty sources. It really makes you think, how might a vulnerability, like a low insurance rate, turn a disaster into a total financial crisis right where you live? We'll see you next time.